Right, so at the start of the day, we were up high with this US dollar, and we got an early offer. The price tumbled uh, around 8:30 on the dot, and this gave an opportunity before the Wall Street Open. Where was that? Over here somewhere, yeah. Um, so well done to those who caught that versus the other pairs. That was the trade that we were looking for, but we didn't get it in our Wall Street Open. So instead, what we got here was a dump, and in the Wall Street Open, we needed to go long the dollar across the board because that was the pump into the dump. So the Wall Street Open, we're looking essentially for a setup whereby we are trading against the prior trend, right? So, for instance, let's go to the Dow. So the Dow, we had this movement here, which was a nice trade. Let me bring up the 3-day cycle template. We go to sessions. There we go. So, for those that aren't familiar with this template, this is what I use to align myself with the week's template. So, today was a day where we were looking for shorts due to the sentiment around the dollar, which flipped in the Wall Street Open. So with the Dow, we had the pump up. Get rid of this. We had the pump, London, up high, pump up. So we were looking to short into that pump. Okay, so the low-hanging fruit trade was space below here. So moving into London, pumped up, dropped. We dropped it again. So we've had 1, 2. This is the third push down. So we could expect a correction at this point. This here would be expected to be resistance in that respect. Okay, so do we follow how this trade was executed? Let me know if you've got any questions or we'll just move on. So why was the dollar so firm? It was already up high when we were meeting in the morning. We met round about here somewhere, and we were looking for the shorts. The short came early before the Wall Street Open. So we had to flip it at the Wall Street Open because we'd already had the dump. So we're looking for the pump. And then later on in the day, we got a pullback, and we're now up into resistance again. Yes, we follow. At the W formation, we pulled back into the neckline. We had a subsequent M formation printed, and we're back up into the neckline. Right? So at this point, this is resistance. And we might be setting up for a Wednesday opportunity, whether it comes in Asia, London, the US, it could be all three. But essentially, we're up high. So let's pull this to a 1-hour chart. That's the 15-minute. We are up high from these lows. So we had last week's lows, Yes. So we've come up 1, 2, 3 pushes. We are 3 pushes up in the range, right? If you've got any questions, let me know, guys. Or if I'm going too fast, let me know. So 3 pushes up in the range, and we're looking for the sell-off. This could be a false breakout of last week's range. Last week's range here. So these dotted lines, this sort of goldish color dotted line at the bottom and the one at the top, that is last week's range. High, low. 1, 2, 3 pushes, breaking last month's highs, last week's highs, yesterday's highs, and so forth. So we are still on the front side of that move, but we're going to start looking for this to break down. Okay? Someone asked me if it had already broken down. Not quite, but it's starting to. Okay? It's starting to make topping patterns. We're moving back in, which is pretty typical. And we're looking for this to unwind, coil, and drop. Or coil, unwind, and drop in the dollar. Okay? So you'd see the opposite, the flip side of that in the euro going up. You could call it overbought, yes, why not? It's so what we're looking for is we're looking for 1, 2, 3 pushes to the upside and then the drop. Or for instance in the euro, 3 pushes to the downside and then the move into shorts. Okay, we're trading against the order flow that is built up over 1, 2, 3, 4 days. Now, typically, because this will be Wednesday, this is the 3rd day of the week, and we use Monday and Tuesday's flow to set us up for potentially a very nice trade that could be a runner. So, essentially, what we've been looking for is a move back or even through the week's high. This could be the low of the week. So, well, there or thereabouts. I mean, we can open up in Asia and London and come down again, but this could all turn into a bottoming pattern in the euro and a topping pattern in the Dixie to come off. Okay, so I'm being asked here about dollar yen, gold. Let's have a look at dollar yen. One, two, three. Dollar yen to come down. Gold. 1, 2, 3 to come up. Making sense, I hope. So I'll do a proper analysis though of these pairs. So just trying to get you guys into the swing of how this weekly template and how these trades set up. We're not just looking to sell something because it's at the high of the day or buy something because it's the low of the day. We are looking for particular criteria to give us a high probability trade setup. Now, that's not to say that that the dollar can't continue rallying. Of course, it can. As I said, it's still front side. So we're not just going to sell it, like I said, because it's up high. We need to see breaks of structure and a number of criteria met. But this is setting up. Okay. So the criteria that we want to see, well, we've got this current trend line here in Dixie between the low and like forth, like so forth. So a break here. On this hourly chart, I'm just going to clean this up in fact because it's very messy. I'll put it to just a standard chart. So on this hourly chart, the structural point is going to be the higher low before the higher high. So it's all the way down here. That is the swing pivot low. That could be well respected as support if we do start coming down. Ideally, what I'd like to see is a move higher from here, and we could bring up our line in the sand, because we're going to have to wait some time for this to come down and break. We're getting less room to short into longs. So ideally, we want this market to continue going up a bit. However, we can come down to a 15-minute chart and start looking to see where was the lowest high before the highest high. Now, unfortunately, we didn't break any structure to the left, so it's down here, okay, at the moment. But if we continue coming up, then we can potentially bring this up as well, and so on. But we're just tracking this flow and moving along with it, and then looking for the breakdown to short, okay, in Dixie and vice versa across the board. So someone's asked for dollar yen. Will a drop necessarily mean a rise in Aussie dollar? Well, yes. If the US dollar sells off, that should be supportive for the Aussie dollar as well, regardless of the RBA and potential bearishness out of the GDP data. So what's good for the dollar, US dollar, is bad for the Aussie dollar and vice versa. Dollar yen, same scenario. So we've got our high over here. We've got our lowest high before that high over here. That's 147.55. So that is the structural point. However, you wouldn't be too wrong in regarding this. Here is trap volume, potentially up high. So a breakdown in here would be encouraging. Not to say that it can't come back up, but it certainly would be encouraging. We've already seen a bit of an attempt here. Okay, so we're looking for shorts. Now, that's not to say this is always going to work out. It may not, and it may continue going, and then you just have to be, you have to be able to react to that and change your game plan. But that's what we're looking for. Okay. And when I say change your game plan, I mean, like I did today, I had to change from looking for a long into these shorts. Wall Street open, it had to be a sell, because there was the pump, that was the low hanging fruit. This was the topping pattern, and the dollar was going the other way to what we've been talking about in the morning, because we'd already had the move earlier on. I can look at gold. With gold, we're going to come right out to the daily chart. We're going to clean up all of this prior workings and work our way down. Right, so we are in a broken down market as per this swing low over here. Right, we've broken structure, and we're treating this now as resistance. So we're bearish while below this on the daily chart. Now we're going to move into the 4-hour chart and have a look at what's going on over here. As you can see, we have a broken structure to the downside, breaking that higher low over here. So this would be regarded as a resistance area. We could come all the way up into here, potentially take it out, triggering stops that are probably placed above here, considering that's a strong move there. So perhaps stops below here, above here, maybe a move up to trigger those before coming down. But the direction of this market leans bearish. Now, that doesn't necessarily mean that the dollar has to rise. Gold could still fall along with the US dollar. We need a risk-off environment for that scenario. Or we could see a slide in the dollar and a slower move to the downside in gold. Or indeed, if we get a slide in the US dollar, this gold could also come on up, but reinforcing the bearish bias at the moment. Now, in order to come lower, we might need to correct up and come down. You draw a Fibonacci on this 4-hour charts impulse. And a correction up into 38.2, 50, the 61, and 78 are all scenarios that can play out. Those levels in there. Potential resistance. And then on the flip side, if we break above here, trigger stops, and keep going up, then we'll need to get above this peak to really add conviction to the upside. Targeting the highs. Now, if we do break this, this is change that to red. Now we've got 1, 2, 3 days of shorts in the market. 1 push, 2 push, 3 pushes. So we could quite easily bottom out here, causing creating a sort of a peak formation down here, whatever price action occurs. So we're flipping it the other way around now. Okay, so that's the other prospect. So if we break above that level 1935, then we can have a continuation up, and that will be eating into all of these shorts. All right, so we'll need to get onto the other side of this bearish trend for that to play out. So, yeah, bottoming out, accumulation, and move up, in line with a bearish thesis for the US dollar. Any questions so far? And does anyone have any pairs they want me to look at? Yes, that's one thesis that we've talked about. So if we get, so the criteria to buy gold would be support, evident that the price is not able to break lower, a peak formation. So when I say peak formation, I'm talking about something like this. Um, these are peak formations here. Yeah, this here. Peak formation, peak formation, peak formation at the bottom, right? So peak formation at top. Will we get a higher, a higher low? That's what we're looking for in gold. So we've come up, correcting down for a continuation up, up, correction, up. Do you follow? Well, you're going to have pretty much everything 3 day pairs because the dollar's a 3 day setup. One, two, three. You know, one, two, three on the euro. One, two, three. One, two, three on cable. Uh, day one, day two, day three. So sort of an inside day. Pulled back, so this is now day one. So we can have a day one move to the downside. So one, two, three, correction. We need to break below the lows. Are we going to have a peak formation here? We had one down here. Are we going to have a peak formation up here? This is dollar CAD. And if so, we're looking for the lower into longs. YouTube, it's right there. Just put in YouTube at RJB Forex. And you'll get my channel, but I'll happily pick it up for you. The Asian market, so for Asia, we are looking for Asia. I mean, I trade the US session. The reason being, A, I don't want to be up in the middle of the night during London, although it would be a great time to be trading, but just not for me at that time of night. But I like to use Asia and London to set me up for the US session because the benefit is as such. Um, because now I like to do things in threes. I like to see a 3 session setup, a 3 day setup, a 3 week setup. So what I'm talking about here is, um, for instance, if we've got Asia, London, and the US all pretty flat as an inside day, we can expect a breakout one way or the other. So that's one scenario. So that's about timings and just being able to read that. But for instance, if you were in London, well, you would have had a nice trade. You've got a market here that's breaking out of this coil. So London long. Um, Again, you've got two sessions here, break. You know that there are stops up here that will be targeted. So nice trade based on that 2 day, sorry, 2 sessions worth of information. Coiled, expecting a breakout. Try and find you a here's a three session setup again. So we've got 3 levels of rise. So based on the Asian session, the London session, and that gap time, then we've got 3 levels from bottom to top. We're up high. Wall Street open, bang, right? Because we've got 2 sessions prior of market flow and information. So we know what we're targeting. So I like to use Asia. Same thing here. Look, it just repeats itself. So using Asia, I mean, you do sometimes you get trades in Asia. I mean, not so much, but you could be set up. So you could have I'm trying to let's just go somewhere random so you can find something. I mean, you might want to be trading the yen pairs in Asia, or the Aussie, or the Kiwi. Um, so let me see if I can find us something in Asia. Here you go. So you've got a market here that's broken down between London and the US. Okay, so London was up high, right? Coming down in the US, coming back up. Now this is a broken down market heading lower. Would you agree? Right? We've come up, consolidated, broken down structure. Now we've crawled our way up, creeping trend. All right, resistance. Asia, sell off, short. Tokyo Open, get short. Why? Because you've got all of these longs to target in a broken down market with a bias to the downside. So that's how you can use prior sessions to help you help you set up with a directional bias for the session that you're trading in. Yeah, I hope that's understood. Let me know if you've got any questions. The indicators. So in the Discord under education, and in fact, while I'm here on my YouTube channel, I think I've got them here somewhere. Let me try and I'll find you in the Discord group. I've done a couple of videos on the indicators. Education. And the thumbnails are Trading View, part 1 and part 2. Part 2. Alright, so go through those videos. I think they're about 15 minutes each. And basically they will walk you through the 3-day cycle template. A new addition is this Luke 3-bar swings. It's not particularly necessary. I just like to use it to quickly gauge where there's been a break of structure, but you can quite just as easily use smart money concepts for that. I explain that in the video, and also I get a visual from. They clutter the chart a lot, so I tend to turn them off. But just give me a quick reference point. Okay, bang, broken that swing low, break of structure. Anyway, so those videos will walk you through each one of these indicators and how to use them and why they're relevant and so forth. Um, so what we can do, if there's no questions, I'll just quickly glance to see if we've got any signal days. Now, a signal day would be something like a first red day, FRD, and that's looking at the NAS here. So um, it was a first red day, and again, we use these indicators to help us identify those. So daily close markers, we had all of these longs. So these green triangles are showing that the day closed bullish. So um, last Friday closed up high, bullish, green candle. Monday closed up high over here, green candle, right? So just helps me again. It helps me gauge um, where we're at. So I knew then that Friday was the first red day out of all of these green days. Now, to qualify as a first red day, you actually have to come up high, ideally the high of the week. So that was the high of last week. And then close low, close below the open. And that is an official red day, right? And what that gives you is it gives you a bias for the forthcoming days. So we're looking to sell high. So this was a move down, a move up, bang, sell high, right? So Wall Street open, we knew that we could be selling. Now, I think actually I sold the S&P yesterday. It was exactly the same setup here, right? Almost a 9-hour trade, and actually got a second entry here. So the first trade was 9, and the second one was 8. So that was using the first red day setup, right? Move up, sell off. And we closed again red yesterday. Not on the NASDAQ, no, the NASDAQ wasn't, but regardless, it doesn't matter because the signal day was on Friday and the trade setup was either Monday or Tuesday. Now we're ignoring that at the moment because it's done. That setup's done. So we're now looking to see if we've got any setups in any other currency pairs. It could be 3 sessions. Well, we've talked about 3 sessions. 3-day breakouts. Well, we've talked about that with the US dollar. 3 days worth of breakouts. So we're looking for shorts across and longs across euro and cable, shorts dollar CAD, shorts dollar yen, right? So you see how that's playing out. Just scanning to see if I can find any signal days. I think we're pretty much we're going to be closing, so we might get another. Yeah, this will be a first red day if we close below the open, which looks like we're going to. This will be a bearish close, and it'll be classified yet again as a first red day because yesterday was a green day. Even though we haven't had a series of green days ahead of it rising, it's still classified as a first red day. So we are going to be looking um, for shorts. So this can come down. Hopefully, in Asia, it will build up, and London maybe down and up. So maybe we'll have a scenario, just theoretically, what could happen here, hypothetically, is we could start building up in Asia, and then perhaps breaking structure in London, and building up again in London, and then cross over to New York, and then we'll get a sell high opportunity for the US session, perhaps. Um, but if that would be unlikely, of course, if the US dollar is going to tumble. If the US dollar is going to tumble, then we're going to be looking for longs and a buy low opportunity. So a first red day doesn't always has to pan out, has to be taken in context, of course. But here is another 1, 2, 3 setup for the NAS today. One, so coming down here, 1, 2, 3, building up, sell off. But someone asked why is the Nasdaq rallied? Well, it was a short squeeze, and it came out of 3 levels, drop 1, 2, 3, bam. Now we're looking for the Oz. Right, so trying to break structure to the upside. This was the lower high before the lower low. So that is a resistance area. We've come up a few times into it. I'd say that's pretty much broken resistance. Right, so we can come down to continue going up. All of those shorts are in the money still. And see again, we had a first red day here, climbed up, short on Tuesday after that first red day. So I think that pretty much covers it, guys. I don't know if I needed to be more specific about the question about Asia. What about the Asian session? So, as I said, I use Asia to set me up for the US session, looking at the flow, whether it's broken down markets, if Asia's opened up high, if London's come down and broken the low of Asia, then the bias is to the downside, and vice versa. But I don't particularly trade in Asia, but you can get some setups in Asia. Okay, guys, so we'll leave it there. If there are any questions, this will be recorded. I'll post it for those that didn't watch it. If you want to go through it again, I'll be with you again in the morning, just ahead of the around the New York Open, and a few hours ahead of the Wall Street Open, and we'll see if we won't get some decent moves out of Wednesday. More likely that we will, because we've had Monday and Tuesday to set us up. Monday, Tuesday, setting us up for the long on Wednesday. Okay, guys, have a great evening, good day, good afternoon. Thanks for being here.